Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So today's video is all about investing overseas, more specifically exchange rates, and how do we manage exchange rates when we're investing outside of our own country and having to purchase different currencies. So for myself, I do a lot of investing outside of New Zealand, which is my home country, mainly in the US, but also a little bit in Australia as well. So it is something that I have to think about a little bit, and it can be quite a confusing topic for a lot of new investors. So I want to give you my thoughts on exchange rates in general. I'm definitely no foreign exchange expert or trader or anything like that. I'm a long-term investor. I've got a multi-decade time horizon with the vast majority of my investments and the way that I kind of approach managing my portfolio. But nonetheless, exchange rates are still important, and I want to get into that topic. So let's talk about it. So just to illustrate a bit of a point initially around how exchange rates can actually impact the performance of an investment, I'm going to put up a screenshot shortly of a screenshot directly from my own personal Sharesight account. And this is going to show what is currently my worst performing investment. So 2020 has been a pretty rough year for many sectors in the stock market. And one of my main investments is a company called Fiat Chrysler, and that is currently by far my worst performing investment of 2020. So on the screenshot I'm going to put up shortly, you're going to see that it's down pretty significantly, but not quite as significantly as it looks like kind of on the surface of things. So if you're interested in using Sharesight and getting some of this reporting, it is really powerful. So I will leave a link down in the description. If you go ahead and purchase a Sharesight subscription, that will get you 2 months free off of that price. So feel free to check that one out. They do also have free options, which if you've got less than 10 holdings will still work for most people. And that's the one I was using for a long time as well. So with all that said, I'm going to put up a screenshot here, and you'll see Fiat Chrysler, which on a capital gains perspective is down close to 40%. So it's down very significantly from my purchase late last year, and it's not something I'm particularly concerned about. Like I say, I'm going to hold this company for quite a long period of time, and I may even add to it, but that's not something I really want to talk about in this video. What you'll see on the surface of things is that in terms of capital gains, we're down about 38.8%, and that refers to just purely the share price. So I have an average price for Fiat Chrysler of about $13.24, and that share price today is more like about $8.38. So it's down about 38%. What also happens though for me as an investor is I can get paid a dividend. So I've had about a 6% dividend yield from Fiat Chrysler. They are a pretty significant dividend payer, especially at today's prices. That's not a stock tip, but they are paying large dividends if they make no changes to their policy in that area through this kind of rougher economic times. So that's the dividends, and what you will notice is interesting for me as a New Zealand investor is that I also have currency gains of a little over 5%. So that means that my total return for Fiat Chrysler after holding it since sort of the second half of last year is, rather than being down about 38%, I'm down about 27%, which is a pretty significant difference. Part of that's obviously due to dividends, but the currency gain is the one that I really want to talk about today. Now, the reason that you're seeing that currency gain is at the time of investing in that business, I had most of my cash in New Zealand dollars, and I had to convert some of that to US dollars in order to purchase those shares on the US share markets. And the exchange rate at that time, I could buy, with my $1 New Zealand dollar, I could buy about 64 US cents to put to work in that market. And what's happened over the last several months is that rate has now changed. So with my $1 now, my $1 New Zealand dollar, I can only buy about 61 cents US. So for me, going ahead and putting more money into the US, I'm not getting as many US dollars when I go through that exchange. But what that means for my current holdings is that they actually become more valuable in New Zealand dollar terms. So if we flip those exchange rate numbers around the other way and go from US dollars into New Zealand dollars, when I first had those US dollars, each US dollar was worth around $1.56 back here in New Zealand, and now they're worth about $1.65. So they've gone up right around 5%, and that's what you're seeing in the portfolio. And we only need to go back a couple of years to see that the US dollar, we could purchase about 70 US cents with one New Zealand dollar just back only 1 or 2 years ago. So this exchange rate, particularly in the US, has fluctuated quite a lot. And the next logical question from that is, how do I manage it? So for me personally, I keep things pretty basic, and there's actually a recent change that I've made in terms of managing how I hold my cash. So the first thing I've done, which was an idiotic move on my part that I should have been doing earlier, is I'm simply just keeping more cash in foreign currencies. So up until this point, I've had the vast majority of my cash just in New Zealand savings accounts because it's simple, and that's where I was able to gain a reasonable rate of interest, even though interest rates are very low at the moment. So that's kind of just where I kept that money. And basically, when I found something that I wanted to invest in, I would send that money over into US dollars or into Australian dollars and kind of just manage it kind of ad hoc from there. So I'm not someone that is purchasing shares every single month on a strict regime or anything like that. It's very opportunistic, and it's sort of whenever I find things, I will put money into the relevant currency and make a purchase from there. So up until this point, that's worked very well. And when I ran into trouble was just in the last couple of months, actually. So in the last couple of months, there were several companies on my watch list in the US that I was starting to pay much closer attention to because their share prices were going down, and they were starting to get to an area where they started to look much more attractive to me. One of the problems, though, is at the same time as the US dollar share prices were coming down, so, you know, the Apples and the Disneys and the Facebooks of the world, their share prices were coming down. At the same time, the New Zealand dollar was also weakening, and I was in a position where nothing luckily kind of really got to a price where I went ahead and wanted to make a purchase. But it did get to the point where if I did want to do that, I would have been in a position where I would have had to take a poorer exchange rate in order to get some US dollars and make a purchase of those shares. So I did make a couple of small purchases in the US with some cash that I did have there. But if I really wanted to do something significant, I wasn't well set up to take advantage of those prices. So that's a change I am going to be making, is I'm going to be keeping a little bit more money in US dollars, also going to be keeping some money in Australian dollars because I have been looking at some Australian companies as well. And effectively what that's going to mean for me is I'm probably going to be sacrificing a little bit of return on that cash, which frankly is not significant in even the best savings accounts and things you can find in New Zealand. So I'm probably going to be sacrificing a little bit there, but it should more than make up for the fact that I don't have to transfer money across at poor exchange rates at certain points in time. So that's one of the main changes that I am personally going to make. The other next obvious question is, how do we know when to put cash from New Zealand dollars into US dollars or New Zealand dollars into Australian dollars? What's sort of the best way to manage that? And although I've just spent several minutes of this video talking about how I'm trying to manage that a lot better, there really isn't a simple answer to this. I don't think anyone can really predict the exchange rates moving forward. If you did, you'd be an extremely wealthy person just from trading currencies, and you probably wouldn't be watching this video. But my general philosophy is that if you're right on the business, the exchange rate probably isn't going to be all that significant. So I heard Monis Prabhai mention that exact message in one of his lectures. I will try track it down. If I do, you'll see it here. If I can't, I apologize. But essentially what he was saying is, you know, if you invest in a business outside of your home country where you're having to use a foreign currency, and that business does a 5x in 5 years, it's not really going to matter what the exchange rate is when you sell that business and convert it back to your kind of homeland currency. So if you're right on the business, it doesn't have significant impacts, I don't think, on your returns long term, but certainly something to keep in mind. I've just been keeping it really simple, keeping some cash in each of the 3 currencies that I tend to work with. If I do have anything that jumps out at me as seeming a little crazy, like for example, we just a few weeks ago had the New Zealand dollar and the Australian dollar basically par. So typically a New Zealand dollar will buy something like about 95 Australian cents. Just a few weeks ago, the New Zealand dollar bought a full Australian dollar, or even slightly more at one point, I think. So I did transfer some money across then and take advantage of that. But again, there's no way for me to know if that trend will continue and look even more attractive in the future, or how that works. It's just something that looked out of the ordinary to me, and I took advantage of that. So that particular situation has worked out well. It is obviously very short term. It's only been a couple of weeks since I did that transfer, but that's kind of the way I'm managing things. So I'm going to keep a baseline kind of level of cash in each currency. Still have the New Zealand dollar as my primary accounts for saving and so on. But that at the very least should allow me to kind of not get caught out when investing overseas. And we have something dramatic happen where stock prices fall, but also we have the New Zealand dollar fall as well. Now, the other thing I just wanted to mention in this video, which also relates to investing overseas, is how I think about taxation and whether I have a preference for investing in certain countries versus others. And again, I'm certainly no tax expert, but this is my basic philosophy, is that, again, if you're right on the business, then for the most part, those things probably aren't going to matter to a huge extent. So if you're getting a 5x in 5 years, you're going to do very well regardless of what the taxation on dividends through that period were and that sort of thing. So largely, I just follow what the best opportunity looks like to me at any given point in time. That said, I do have sort of a preference list for me personally. So at the top of the list is definitely investing in New Zealand companies. I know I talk about vast majority US companies on this channel, but New Zealand is definitely the ideal place I'd like to find a really attractive investment. So couple of reasons for that. Tax time is super easy with New Zealand. I don't have to worry about foreign exchange like I just mentioned. We get imputation credits on our dividends, so our tax treatment is a lot better there. And all in all, it's just a lot simpler. So New Zealand is definitely at the top of the list for where I would prefer to find an investment opportunity. Australia is probably second. So we have pretty good tax treatment in Australia. So again, I'm not a tax professional, so if you've got complicated tax questions, ask a tax professional and not me, please. But we have pretty good treatment in Australia as well. So there are a lot of companies that fall into what are called a FIF exemption list, which means basically that we don't have to pay foreign investment fund tax on certain Australian companies. And you can go straight to the IRD website and search which Australian companies kind of fit that bracket. So that's great. We don't get quite as good a dividend treatment as if we were an actual Australian investing in those companies. So they have franking credits where they get some tax credits on a lot of their dividend payments. We unfortunately can't capture that as New Zealand investors going into Australia. So it's sort of slightly lower down the list for me than New Zealand businesses. And then the US sort of falls after that. So that's the way I think about it, at least in theory. If I was given 2 equally attractive opportunities, or 3 equally attractive opportunities, one in each of those countries, New Zealand would definitely be my preference in theory. And the reason I say in theory is that 3 equal opportunities just don't exist. So in practice, if I find a company, I purchase it. If I find something that looks really attractive, I go for it. I'm looking for, as you've heard me say on the channel many times, 1 to 2 investment opportunities per year. So if I track it down in any of those 3 countries, I'm going to go ahead and purchase it. Again, if I'm right on the business longer term, then the taxation and the foreign exchange and all those things shouldn't have a huge bearing. So if you enjoyed the video, hit like, hit subscribe. Like I mentioned earlier, if you're interested in getting the 2 months free with Sharesight with any purchased subscription, then click my link down in the description below and you can get access to that. So that's all from me today, and I hope you have a great day. I will see you in the next one. Cheers.